Did you study Spanish today? If you have Duolingo on your phone, you are probably familiar with this sense of pressure from this green owl. By the end of 2025, Duolingo has amassed over 135 million monthly active users, making it the undisputed global leader in language learning. Its stock price has also soared over the past few years. But does a great company equal a great stock? If you're considering buying Duolingo right now at around $200, my model suggests you might be making a mistake. Today, we won't talk about learning languages. We'll talk about what this owl is truly worth. I will use the most rigorous sum of the parts SOTP valuation method to break down its real intrinsic value and tell you why my rating right now is hold neutral. First, let's quickly go over the fundamentals. Duolingo is essentially a giant freemium money machine. Its business logic is simple. Attract massive users with fun, free content, currently 135 million MAUs. Convert these users into paid subscribers. The current conversion rate is about 8.5%, which is 11.5 million paid subscribers. It also has a business many people overlook, the Duolingo English Test, DET, an online English proficiency test challenging TOEFL and IELTS. Most importantly, this company is very rich. They have over $1 billion in net cash on their balance sheet and virtually no debt. This is quite rare for a tech stock that usually burns cash. So, how much is this entire business worth? Let's get into today's main event, the valuation model. To properly value Duolingo, we can't just look at the PE ratio. We need to break it down into three parts: the core app business, the English test business, DET, and the cash on hand. Part 1, the core app. This is its heart. Our DCF model assumes that over the next 5 years, Duolingo's revenue growth will gradually decelerate from 20% down to 8%. This is normal as the scale increases. At the same time, with the integration of AI, the profit margin will improve to 35%. Discounting these future cash flows back, we calculate the value of this core business to be approximately $8.4 billion. That translates to a value per share of $168.60. Part 2, the English test, DET. This is a high-risk, high-reward bet. Although it currently accounts for a small portion of revenue, the margins are very high. We calculate its valuation to be $107 million. That translates to a value per share of $2.16. Doesn't sound like much, right? But this is more like a free call option. In part 3, the cash on hand. This is the simplest part. Cash is cash. After deducting a small amount of debt, this part is valued at $1 billion. That translates to a value per share of $20.56. All right, adding these three parts together, $191.33. This is the intrinsic value we calculated. But please note, my calculation includes a major hidden risk. The current stock price is about $199.75, while our calculated value is $191.33. This means the market has not only fully priced in its growth, but has even factored in a 4% premium. Why am I concerned? Because AI is a double-edged sword. The good side, Duolingo is leveraging AI to create a more expensive subscription service, Duolingo Max, which can increase the average revenue per user. The bad side, also AI. Imagine if Apple Siri or OpenAI's GPT could offer perfect, free conversational practice. How secure is Duolingo's moat then? This is the biggest long-term risk. The current stock price assumes Duolingo will achieve total victory in this AI race, leaving no room for error. We are talking about the near absence of a margin of safety. Furthermore, Duolingo is banking on a big boom in the Chinese market, but the regulatory risks and execution challenges there are also discount factors we must consider. Finally, let's deliver the conclusion. Based on our model and risk assessment, I am giving Duolingo a rating of neutral hold. I am setting its 12-month target price at $190. Advice for investors. If you already own the stock, it's fine to hold. It is a good company, but I do not recommend adding to your position right now. If you are looking to buy, the current price offers no margin of safety. Be patient. When to buy? If the stock pulls back to the $160 to $170 range, that would be the genuine sweet spot to step in. Investing is not just about buying a good company, it's about buying a good company at a good price. Right now, Duolingo is an expensive owl. Do you think AI will disrupt Duolingo? Or is its brand moat unbreakable? Let me know your thoughts in the comments section. This is Lynn. If you like this kind of hardcore valuation analysis, don't forget to like and subscribe. We've got Spanish to study. See you next time.